Taylor, a busy day for GE. What have we learned?
John, those were some of the key headlines here that you're talking about. The adjusted earnings per share anywhere from $1 to $1.07, lower than previous estimates of $1.18, as well as a framework for free cash flow now anywhere between $6 billion and $7 billion. You'd mentioned the dividend that they'd cut by 50% down to about 12 cents a share. You'd initially seen a little bit of a pop. I have the intraday chart here on my terminal. Some analysts had expected maybe that dividend cut was going to come last week. When it didn't, they were nervous. But no, indeed, it did come today. You can see also we're waiting for some other headlines to come out about some of the divestitures, some of the asset sales the company is going to make. As we've been talking about, they might do a focus here on aviation, power, and healthcare. As you can see, it's a percent of operating income. Those are the three largest segments, anywhere from 20 to 40% here, and perhaps looking to cut back on some of that transportation. We are getting some more headlines here if you want me to read them out. They're establishing a new finance and capital allocation committee. And as well, GE saying it needs to align its dividend payment with cash flow generation. So I can continue to bring you more headlines as those cross. But for now, just as you said, adjusting the earnings per share down to about $1 to $1.07.